President and CEO.
President and CEO of Catalyst Bank. Got it.
All right. Welcome back to the Make Account Podcast.
I'm Marcus Mire, founder of Mire Group CPAs and the Total Control Accounting System.
I'm Tyler Warner, small business owner with a lot of accounting questions.
Tyler, this is a treat. Today we've got another guest. So less you and me, more guests, which we always love.
I know.
We've got Joe Zanco, who is the president and CEO of Catalyst Bank. Joe, first of all, thank you for coming. We were having a really great discussion that I know is going to spill over into this. Give us a little bit of your background. Tell us what you're up to at Catalyst.
Well, Marcus, thank you guys for having me here, first of all.
Yep.
So I grew up in St. Bernard Parish, if we're going to go that far back. I'm an LSU alum. I'm a CPA like you are. I started my career with Arthur Andersen. Ultimately, it was one of the big six accounting firms back in the day.
Yep.
And Iberia Bank became a client of mine in 1998. And for 4 years, I did consulting work for Iberia Bank. Then in 2002, Iberia Bank's CEO asked me to move my family from St. Bernard Parish, which was tough for Mama, but asked me to move my family to Lafayette. And based on my travels here, I really liked it. Something about this community spoke to me, and my wife trusted me, and we made the move back in 2002. I joined Iberia Bank. I would become the principal accounting officer for that company.
Principal accounting officer, okay.
Principal accounting officer. So my focus was CPA stuff. Was there for 6 years on the payroll there, had a wonderful experience. I then got recruited by Home Bank to take Home Bank public in 2008. So joined Home Bank there, served for 12 years as CFO of that company, wonderful people. And then just in the last 3 years, St. Landry Homestead, which was the name of Catalyst Bank prior to me getting there, was looking for a CEO to help take them public. And I joined the bank 3 years ago. We completed our IPO in October of 2021.
Okay.
And it's all systems go at this point.
Okay.
Can I just ask, I'm fascinated by the fact that banks have, it makes sense that they have accounting, but it's got to look different than
public accounting?
Yeah, exactly.
Well, it's different in the sense that one of the confusing things for us CPAs is our loans are assets and our deposits are liabilities.
Right.
And so that's flip-flop from others. So that's the big change. But each of the companies that I've been with, Iberia, Home Bank, and Catalyst, have all been public companies. So those of you who are CPAs would know that the reporting thresholds for public companies are pretty significant.
Yeah.
Gotcha.
So when you got the position at Catalyst, you and I were kind of talking. We both kind of done new things at the same time. I started Mire Group, not as close to as a Catalyst Bank going public, but right up there with it. But what was kind of when you went there? Was that the impetus to take them public, given your experience in doing that with Home Bank?
Yeah, it was. And so you need, if you're going to do this process, it's a pretty difficult process. It helps to have someone who's been through it before.
Gotcha.
And I'd actually gotten to know some of the board members of Catalyst over the years, just meeting them at conferences and things. And we felt we'd be a good match for one another. And 3 years in, we still get along very well and all believe we're pulling in the same direction.
Gotcha. So you obviously you get there. And the goal is, hey, okay, Joe, we're bringing you in here, new direction, kind of a new everything. New rebranding, obviously. We want to go public. Now that that's done and the dust has settled, what's the focus now of Catalyst in terms of kind of helping small businesses? What are you guys bringing to the table, and what's your focus in helping the community, especially small business owners?
Yeah, so the St. Landry Homestead, which has been around for 100 years, the focus of the company was always on single-family home mortgages, alrighty?
And they would keep them?
They would keep them, yeah.
Oh, wow.
And so that was the focus of the company. Unfortunately for us bankers, that business has gotten so much more competitive over the years. And so the profitability of that business has been down for some time in our industry. And so what we've done since I've been aboard is we have shifted the focus away from our growth being in home mortgages. We still do them. We love doing them. And in fact, I helped a friend out a couple of weeks ago get a home mortgage. But our focus is on serving small businesses.
Right.
At our core, we believe that jobs are key to improving our community. And so our mission is to be catalyst for economic growth in our community. And the way that we do that is we help local businesses grow, because when they do, they create more jobs and they give more people an opportunity to better their lives.
Yeah, so when you're saying that, I'm thinking about kind of how we operate in terms of what we do here in our firm, and which was, I could kind of make it akin to people come, a lot of CPA firms do taxes, and that's their product, and that's been heavily commoditized, kind of in the mortgage industry. And we think of taxes, I think it sounds like the way you think about a home loan for a small business owner. It's a small piece of the pie of helping you overall run it, financially, but it's not our focus. Meaning we want to help the small business owner, and if they need a home mortgage and we can facilitate that, great. But really, what we're trying to do is help. We want to be advocates for small business. Am I saying that right?
We want to help you grow your business.
Okay.
Again, when I look at all the social challenges we face in this country, I don't have the answers to all of them. But I do know that a job helps families
Right.
enhance their lives.
Yeah.
And so if we've got a growing local economy where banks like us who are focused on this community are helping business owners grow, then that gives a whole lot more people a chance to better their lives. Listen, I come from humble beginnings. I didn't need a handout. I needed a job.
Right.
And fortunately, over the course of time, I was able to find the right places to be able to grow my career and take care of my family. We want to offer those same opportunities to others.
Gotcha.
Joe, how do banks, or how does Catalyst Bank take that like mission and quantify it? And do you like, is it become numbers quickly in the sense of like you're trying to inject so many million to loan out to small business owners? Is so much of that, like, do you guys allocate towards like equipment and assets versus like bridge loans for payroll? Like, how does it become tangible for business owners and what you guys are doing?
Yeah, so first of all, when we completed our IPO, it brought in an additional $50 million of capital. We already had 50 already. So we sit here today as, from a publicly traded bank perspective, the second highest capital to assets ratio bank in the country. So we have a boatload of capital to deploy. I don't look at it from the standpoint of numbers. We don't have I look at it from the standpoint of stories.
Okay.
Stories of helping business owners grow. And so there is a quantification to it, but man, I rather the qualitative big time.
Yeah. Is that scary for your board, or for, like, it seems like that would be the tension, right? Of like,
No, we need to produce still. I mean, again, I'm a public company. We put out
We love your
earnings.
stories, Joe, but where's the bottom line?
The rubber meets the road at the bottom line. So we have to produce.
Yeah.
And so stories are a lot more fun to tell, but if the stories aren't backed by numbers,
Yeah.
you don't get to tell stories anymore.
Right.
yeah.
So
Yeah.
no,
You're out the storytelling.
So,
business, definitely.
Yeah, so I say most of our audience as business owners could probably come up with a really compelling story about how bad they would need
Right.
capital.
Right.
What do y'all look for? Like, what is that? What could you prepare a small business owner to, like? Marcus is always telling us to have like our finances in order, like be able to tell your financial story.
Yeah.
But like at the end of the day, I mean, is that sincere? Like, you hear their situation and their finances. What information plays a role in?
Well, it starts with your background, right? If you have a high character background, a person with a history of paying your debts in the past, we believe you're more likely to pay them in the future. If you have the opposite of that, well, we're going to be more skeptical. And
Right.
so your past is very, very important. So we certainly look at credit scores and how your business is doing, and having a plan is critical. You shouldn't just come to a bank and say, "Hey, listen, I need $800,000 because I want to increase the size of my CPA practice."
Right. I want to expand.
Tell me how you're going to do that.
Right.
And so a business plan is very, very important, and having an honorable past is important too. Not that we help people who have messed up in the past. I mean, we all deserve second and third chances, but certainly we look to your background and how you've been behaving in the past to give us some sense for how you're likely to behave in the future.
Now, I know one of the things you and we talk a lot about doing things differently, and how Catalyst is really trying to make their mark. And I think if I could sum it down for you, it's service, right? What does that look like? I know a lot of times you're comparing yourself. You're saying, hey, we're a local bank with local people who can help you. And it's a little different than something you're going to get at the big banks. What does that look like to a small business owner who's maybe thinking like, okay, yeah, I've been with a big bank and they're just my bank. But like, what does that look like when they work with somebody local who can help them get things done probably a little more easily?
Yeah, well, I'll give you a sense for what our new clients tell us. So
Okay.
we get our new clients from much larger banks, okay? What they tell us is we're more responsive and we're more flexible. In the last couple of weeks, I've had a chance to help out a friend who was looking to expand his business, who he was working with one of the larger banks. They have a box.
Yeah.
And he wasn't quite fitting in the box. And he's a great guy with a great background, a very successful business. Well, he finally reached out to us, and doggone it, we were able to get a deal done for him. Save them money as well. Sometimes you perceive when you go to a smaller bank, you're going to spend more, and that's not necessarily the case.
You
don't
talking about
have
interest rate wise?
Absolutely,
Gotcha.
and fees and all of those good things. So we
Right.
were able to help him out. Had another buddy of mine. He and his wife are very, very successful. They're transitioning to a new home. The old one's not quite for sale yet. So there's things you have to work through. When he reached out to me, he was working with a bigger bank who he didn't quite fit into their product.
Yeah.
And he asked me, "Do you guys have a product?" And I'm like, "No, we don't. We create the solution with you," and we've been able to help him out, and he and his wife are going to be able to transition into a home that he and his family are really going to be able to enjoy.
Nice.
So it comes down to flexibility and responsiveness.
Gotcha. All right, so I got it. If we're going to talk banking, we got to talk. You've alluded to this a little bit, but just state of the industry. When people start thinking banks, nobody. Let's just say 2 years ago, you put your money in a bank, you think it's as good as gold. It's safe.
Yeah.
You've had.
Probably, I mean, even funny the way you said it, when you're thinking banking, like, people probably weren't
even thinking banking, right?
And now it's like, in the past few years, we've had, like, I mean, business owners we've got crypto, we've got, all this new bill pay software, all the.
Well, and where I was going was banking failures.
Yeah.
You weren't even. Banking was like the way you breathe. You don't even think. You just put. You get your 10-year-old. He gets old enough. You say, "Just open a bank account." Right? It was like it's in our fabric and our DNA. And then recently, I mean, I'm a crypto proponent. We probably won't talk about that, but people even talk about being sovereign of their own money now. Right?
Mm-hmm.
So we weren't thinking about banking in that way. It was just like, that's what you do. Bank failures come along, and now people start to go, "Oh, okay, maybe I need to think about this banking thing." What can you tell people when they start thinking, and they hadn't before, about the safety of their money, now, given this environment?
Sure. So let's look back, first of all, to the Great Recession. That was 2008, 2009, 2010, where a lot of banks failed.
Yep.
And things have been pretty clean since then.
Yeah.
One of the reasons is the economy has tended to move in the right direction during the course of that time period, and also capital requirements went up. So as we sit here today, banks' capital positions are much stronger than they used to be during the course of that cycle. As you look to the three failures that we saw a few months ago, those were one-offs. One was heavy crypto investors. One had a lot of IT startup business. So those were one-offs. And so, the banker in me wants to tell you, "Oh, the failures are over." That said, we do anticipate in our industry a recession coming.
Okay.
And if a recession does indeed happen, that typically increases the number of bad loans at banks.
Yeah.
And so that could lead to another cycle where we have some bank failures. I certainly wouldn't anticipate it would be in the numbers that you saw back during the Great Recession.
Right.
But I'd also be surprised if we don't see a little bit more of that as any sort of recession hits.
Yeah.
For you as an individual, especially those of us who are CPAs, banks, even non-public banks, are required to publish their financial information every quarter. So you could get on the FDIC's website as soon as we're done with this podcast and find out your bank's capital position. So if you have any doubt, that's what I'd suggest you do.
Can you explain when you say capital position for
Yeah.
people like a layman's breakdown?
Yeah,
what would that exactly mean? What are we looking for?
A higher number.
Yeah. So let's look at it simply. How much cash does the bank have to back up its investments?
Okay.
And so,
Its investments being its loans.
Capital divided by assets
Yeah.
gives you a sense.
Yeah.
You'd like to see your bank, near 10% or above. We're through the roof where we are right now,
Right.
in a great way. But that's what you should look to. Across our state, banks are pretty healthy. There are one or two or three or four that, when you look at that capital assets ratio, they're thinner than I would want them to be.
And not to get too much in the granular, but with the Silicon Valley Bank deal, they were exposed pretty long on some bonds with a long maturity, right?
That's right. So when you
they
think
couldn't
about-
get the cash. They had to recognize losses.
When you think about our government's reaction to COVID, whether you agree with it or not,
Yeah.
our government pumped a whole lot of money into the U.S. system.
Right.
That money ended up on bank balance sheets. That particular bank chose to take those funds and invest them in very long-term investments.
Which they thought were probably the safest place to put them.
They thought they were pretty safe,
Yeah.
unless interest rates rise rapidly. And
Which-
the value of those bonds went down significantly. Their client base was a lot of high net worth tech type startup companies, that sort of thing. And so once there was any hint of a problem with the value of their investment securities, a run on the bank happened, and just like that, we had the largest bank failure in U.S. history.
Crazy.
Wow.
And bank, it's funny you say we even still use the old terms, right? Run on the. I mean, that is the term. But,
what was different about this run
it was clicks, right?
is this is the first time it was clicks, and you didn't have to stand in line outside a branch. Yes, you think back to the financial crisis,
Right.
mobile banking and things like that weren't as popular,
Yeah.
and so that run happened without anybody having to go through a bank door.
Yeah, I'm thinking of like It's a Wonderful Life. Always watch that Christmas time. Yeah, but that's like the early 1900s. At least that's what it's set in. And you think of the guys outside, and they're shutting the window. We can't take any more. But like now, it's a bunch of guys in their office
That's right.
on the computer or their app going, "Ooh, get a couple dollars out."
Absolutely.
And that really kind of speeds up the process. So what can you do? What can you do if you're thinking, okay? So obviously, I think I know what you're going to say. Be with a bank that's well capitalized. First thing.
I actually have
Okay.
this might be a dumb question, but like, I mean, even when that run on that bank for if you're thinking of your business checking, personal checking, I mean, the FDIC covers up to what, like 250?
250,
So I mean, all of that was covered up to 250, right?
Correct.
Yeah. So even when it ran, I mean, I guess I'm
I
just
think
saying.
they even backed it further.
But if you have 4 million, the 250
Right.
doesn't feel
I'm
that
just-
good.
Yeah.
Now keep in
But I'm
mind.
just saying, for the average person, like,
Correct.
how much do we? How
No,
much?
if you've got under 250, then you shouldn't lose any sleep at night. And keep in mind, again, whether you agree with the government's
Right.
policies or not,
that notwithstanding.
we essentially, I'm saying we, the bank insurance fund is going to make everybody whole that should have lost money in Silicon Valley Bank. Now, what our government came out and said in the days that followed is, this is not going to fall on taxpayers.
How?
Come on. It ultimately all does trickle.
Yeah.
And so, we will all pay for the failures of those banks.
Yeah, so I guess the number one step would be in that regard, to kill the point. Be at a bank that's solid, financially, capitalized well.
Yeah, you should know.
Yeah,
And again, the information's available.
yeah.
I-
It's
you
just
know-
we're not trained to think about that.
Absolutely.
We're trained to think banking is just what you do.
That's right.
Put your
And,
money there.
one of the things I try to encourage people, so deposits are a big deal in our industry right now. We saw all the COVID money pour in, and now it's pouring out. We see rates going up and things like that. So all of us banks are fighting for deposits. And what I try to encourage people is, as it relates to your deposits specifically, find a local bank to put your deposits in. Because when you deposit money in our bank, not just ours, but any of the local banks, that money's staying in our community.
Yeah.
Deposit with the large out-of-state mega banks, and they're going to do what they should do, is they're going to invest it where they see the highest return. And
Yeah.
so people don't understand the importance of kind of the economic cycle and keeping their deposits here, because that is a bank's fuel. How a bank can catalyze growth in a community is we've got to have the deposits to be able to loan out and help people
Right.
buy homes or expand their businesses.
Right. So I'm going to ask you about technology. That's
Sure.
We love talking about that. Where kind of are you guys, or what do you, when you think, like when I think about, we've ranted on banking before, and I warned you before we came on.
Sure.
We've ranted on banks and technology or lack thereof, and I guess where's Catalyst headed as far as making those strides? I think you even talked about that already kind of in place, but to make it something what I call frictionless. And I think that's what everybody's looking for. When you think about technology, you think Amazon. Why do they make it easy to buy? Click, shipping's already done. I mean, it's done. Where's Catalyst in terms of thinking along those lines going on the technology front?
So I think our strategy is to be branch light, technology heavy. And
Gotcha.
so when you look at our consumer offerings today, when I left my prior banks and went to Catalyst Bank, I didn't take a step down in technology at all. If you're one of our mobile banking customers on the consumer side, you can deposit your checks, with taking a picture of them, you can transfer money, all of that good stuff. On the business side, we have a great internet solution. We're not where we want to be from a mobile banking standpoint, from a business standpoint.
Right.
So we've actually made the decision to do a pretty significant business systems upgrade in the coming months to make sure that we are right where, when we're able to finally talk someone into moving from one of the mega banks, I've got to give them a great technology platform
Right.
to land on. So that's our focus.
Yeah, because I will tell you, it's again, used to 10 years ago, a bank is a bank is a bank, right? Now, I'm always talking to my banking buddies about, hey man, like this is what I'm seeing in other people. You guys should be doing this. I don't think, maybe not you, but other people, you don't think it's as big of a deal. But I'm telling you, if you're sitting in your office and you can't get something done with a couple clicks, even though you might have a wonderful service and the guy answers his cell phone, it's a differentiator. It's just a different mindset than 20, 30 years ago, where the biggest differentiator for banking was the service of the people. And I like to think of it going whereas technology can do the heavy lifting, people can support with great service. That's kind of how I think about
That's
it.
right, and then that's the way it goes right now.
Yeah.
For your deposits. But as it relates to loans, again,
Yeah.
when you're coming to a bank asking for $400,000,
Right.
relationship can be incredibly important. And
Yeah,
having
that's
a
where-
banker
yeah.
that knows you and is willing to work with you and help you with some flexibility when you need it, that can be tremendously helpful.
Yeah.
Yeah, how much influence do you have over the technology? It sounds like y'all are buying technology or y'all are buying software packages. I mean, how much influence do you even get over what features and
Yeah, so my influence is how high on the tiers we want to go,
Okay.
is what our specific offerings are going to be. A bank our size, quite frankly, a bank that's even much larger than us, we buy products that are sold by technology companies, and they help us deliver those sorts of solutions. So everything's available to us. It just depends on how far we're willing to go. The good news for a bank our size is the technology cost has come down considerably. So we can end up affording the types of things many of these mega banks offer as well.
I was
it's been-
curious about
yeah.
that too, because I know that's a broad brush that all technology has gotten cheaper, and that's a lot of what we talk about is things that were available to enterprise or you had to have custom software developers can now be done on an app that you either pay nothing or
Right.
a nominal fee. I was curious if that's where, if we're at a place where 5 years from now all this banking technology is just standard, this is what it is, and you don't even have to be making these big leaps in investments. Is
Yeah.
that making sense? I was just curious I didn't get the impression that you guys had a team of developers
Yeah.
that are crafting all this software for your bank
We don't.
specifically.
We're typically buying stuff that's tried and true tested from a technology vendor with strong reputations in the industry.
Yeah. Okay.
Yeah, I keep thinking we're in this shift, right? I'm following a lot of what's going on with AI and all the trends and stuff, and it's still coming back to your point earlier about, look, I'm the biggest proponent about technology doing the heavy lifting, the mundane tasks, the data pushing. We had already talked about if I've already given you my data, I shouldn't have to fill out another loan application, which I've done a million times at banks. I'm thinking, you already, so all that said, where everything's going with technology and AI, the human element is, and I'm reading and I agree with it, it's going to be more important. You want to be able to self-serve with technology, but at the beck and call, if you've got Jude on your team, if I can be look, I've got everything done, but Jude, man, I'm not sure this is working properly, or can you guys finagle this deal? Man, I think that's a really a sweet spot of I've got the technology to get the basics done and to not bother you guys. But man, when I need somebody, I've got a human on the other end of that. I guess is that kind of
Yeah, I had lunch with a buddy of mine earlier this week, and he is a client of a much larger organization that used to be based here but is no longer. He had a check fraud in his account almost a year ago now, and his banker, who I know well, he's a good guy. Because the bank has gotten so large, the banker just no longer has the ability to move the needle. So the guy's been fighting with his bank for darn near a year over a check fraud, and he reached out to me because he's going to move to us because he's just so tired of not being able to get answers.
Yeah.
And so that's what we hear so often is that when I'm doing my pitch on being more flexible and responsible, the person I'm pitching will typically stop me and give me an example of how their large bank has treated them that way.
Right. All right, real quick, check fraud.
Yeah,
Being
check.
see,
It's on the rise.
what can you do?
And
I mean,
so-
I know what I say,
Yeah.
but when you and I were talking before the podcast, I'm going to ask you about this because I'm telling my clients, and I've told them ad nauseum, stop writing checks. I've had multiple clients with check fraud. They had to fight with, ultimately got their money back. I said, we talk about bill payment software. We love it because it integrates with the accounting software and automates a lot. But what are you telling people about checks and how to move money and pay your vendors?
Yeah, so let's talk about fraud for a second. So, the criminals are they don't sleep. And they were on debit card fraud for a long time, and they were hitting consumers in our industry pretty significantly. Well, we've gotten better at managing that. People with debit cards are doing a better job of controlling them. Banking software has gotten more sophisticated to recognize transactions that don't quite look like you might have been doing that. So debit card fraud is actually going down some. But the criminals like to get paid. And so they have shifted a lot of their focus to check fraud.
Okay.
And so what we encourage folks to do is the fewer checks you can write, the better. Because what these guys do is that if they get a hold of one of your checks, they simply recreate it.
Yeah.
And then all of a sudden you've got major problems on your hands. It's a big deal for our clients, and it's a big deal for the banking industry. So you and I speak from the same voice there.
Yeah.
We tell folks to write fewer checks, do more electronic payments.
And is you guys obviously are facilitating that if you're a business customer at Catalyst in terms of paying your vendors?
Certainly, would much prefer you ACH. Yeah, and we try to make it as easy for you as possible.
Gotcha. All right. Thank you for that.
You got it. Listen, thank you.
I was going to replay this to a couple of clients. I say, okay, if you don't listen to me, listen to a bank CEO, please.
Yeah.
Like, I'm trying to tell you, quit writing checks. You can't get your check stolen out of the post office box another time for me to have to tell you this again.
Sure. Right.
You know? So anyway.
Yeah, what else do we need to hear? We were talking about before we hit record, like, Marcus and I tend to be like full throttle with technology.
Yeah.
Like, is there a way you might sober us up a little bit or like caution us? What do we need to hear about what you guys are trying to protect, with technology and why there might be some good speed bumps in terms of, putting all your stuff online? I can. You understand what I'm at? Like, you were talking about some things just some caution that you guys take as a bank. And why?
So listen, there are these services out there that are getting increasingly popular. I won't mention any by name, but where you can basically put your entire financial life there. You can put your Catalyst bank accounts there. You can put your XYZ company, investment funds, and you go to this website and you give them your user ID and password, and they can aggregate all that information for you. So you can just, this one-stop shop of seeing all your stuff. That sounds great until they get hacked. And so, I don't do that personally because I'm fearful of those parties that perhaps don't hold themselves to the same technology protections that we hold ourselves.
Right.
I look, if you must use those sorts of services, I would certainly look to the ones that have dual factor authentication, that whenever there's a login, your phone gets a text message, things like that, to make sure that you're adequately protected.
Yeah,
right.
To the degree, we don't mind naming names here, but because I'm thinking like we're on one of those, I think it's called like Monarch, or maybe like I used to be on like mint.com.
Right.
Is that kind of aggregate you're talking about?
That's the type of aggregate. Those are the types.
Okay.
Yeah.
But yeah, they use a service, like even Zero uses a service like Plaid.
Yeah.
Plaid is like a third party that's kind of creates this read-only environment. So like you log into your bank, but you're logging into Plaid.
And you're giving them the credentials.
Yeah, but then Plaid is the one that aggregates all that information. So I guess we might need to look into it a little bit more.
At least, I think the takeaway here is just use some common sense. Start thinking about when you give people passwords. Okay, because like you and I probably take it a little step further, like be like, okay, I did that, but what are the safeguards, which you mentioned, which is multi-factor, all kinds of other than, because you don't want a single point of failure, right? I don't want just the password to be what gets you in. But I think if nothing else, people, like you said, we tend to be pushing it. Just be wise. Just be thinking, did I give an aggregator 10 financial accounts and maybe 9 of them have multi-factor and 1 doesn't? And I think that's the takeaway here. Is just
and
do
they all have the same password too?
Well, that's a whole different story about best practices with IT.
One of the other things that really is impacting individuals, and unfortunately the crooks are targeting our senior citizens mostly.
Yeah.
My mom's 73, and despite the fact that I've given her the speech 1,000 times of, Mom, if you don't know who texted you or called or or you aren't expecting the email, just assume it's a fraud and delete it and move on.
Yeah.
If it ends up being legit, they'll find you.
Yeah.
But a lot of people are getting hammered that way. The level of sophistication in those emails, they look really, really good.
Yeah.
If you're not in my contact list, I'm not answering your call or responding to your text. And I think that unfortunately has to be the rule
Right.
in today's world.
Yep.
Yeah. All right. Well, anything else we need to know? Like I was curious about, what banking relationships do look like. We talked about how like that is the differentiator for you guys, the responsibility, the flexibility. Is it just, you guys text, email, phone call? What does it look like? Or do you still walk into a branch, or how's that look? What expectations do you set for clients?
It's transitioning more and more to we go to you. But we still have clients who love to come by the office and chat. But there's a lot of, listen, it's email and phone. Quite frankly, if I didn't work for a bank, I don't know how many times I'd go into a branch.
Yeah.
Something like for a smaller bank like us, the number of ATMs used to be an impediment. It's not anymore, because you can get $40 at Walgreens now. And so something that used to be a hurdle for somebody banking with us, like us not having as many ATMs as the Chases,
good point.
is not the impediment it used to be.
Yeah, and I wouldn't even ask for an ATM. I'm not.
Yeah, but listen,
Every once in a while it happens though.
20 years ago, that would have been a key driver in your decision making. It's just the world has changed. Technology continues to evolve.
Right.
Quite frankly, you probably don't use a lot of cash any longer either.
Right. Yeah, that's what I'm saying. It's rare that I go to the ATM about as often as I have to send a letter.
Wow. That's probably a good place to end it.
Yeah.
Joe, if people want to get in touch with you, find out more about Catalyst, learn about what you guys are up to, what's the best way to do that?
Man, call me.
Call you.
594-5009. We'd love to talk. That's how we build relationships.
337.
337-594-5009. That's my direct line. We love building relationships, especially with small business owners in our area. We've got a great website, catalystbank.com, but you're going to see the same things on our site that you see on any other bank site.
Right.
We'd prefer to reach out and build a relationship.
But if you text him and ask him for money, he'll probably think it's fraud.
Correct.
Just so
If you're not in his contact list, just know he's not returning that
Leave a
email or
voice-
text.
Yeah,
This
leave
is
a
just saying.
voicemail saying
I
you would
know
like to work
Marcus,
with him,
and if Marcus texts me for money, he's going to have to come in and visit the branch.
All right.
right.
Thank you, Joe.
Yeah,
This
thanks,
has
man.
been
This was great.
great. Yep.
Thank you, guys.
All right.